Everyone thought the internet had abolished the old rules of business. They were catastrophically wrong. In the late 1990s, a peculiar mania seized Wall Street. Companies with no revenue, sometimes no product, commanded valuations in the billions. Webvan, a grocery delivery startup, raised nearly $1 billion. Pets.com spent millions on Super Bowl ads. The logic was simple. The internet changes everything. Traditional metrics no longer mattered. Growth, not profit, was the measure of success. Venture capitalists competed ferociously to fund the next big thing. If you didn't invest, your rival would. Fear of missing out became the dominant emotion. A company's business plan mattered less than its narrative. Can you imagine delivering groceries? That vision alone attracted hundreds of millions. The question of how to profitably deliver groceries was deferred, then forgotten. The numbers became increasingly absurd. Companies valued at multiples of their annual revenue when they had revenue at all. A startup that had lost millions could still command a higher market cap than established retailers. The metrics that had governed investing for decades were dismissed as relics. This time is different, investors whispered. It never is. By early 2000, reality began to intrude. Companies couldn't sustain their burn rates. Advertising budgets couldn't substitute for actual customers. Pets.com, despite its famous sock puppet mascot, couldn't survive on hype alone. The first bankruptcies arrived quietly, then, like dominoes, they accelerated. Thousands of startups evaporated. Fortunes that existed only on paper simply vanished. The crash was brutal. The Nasdaq fell 78% from its peak. Billions in market value, which had never truly existed, disappeared in months. Investors who'd chased the narrative lost life savings. Employees who'd accepted stock options instead of salary found themselves with worthless equity. The lesson seemed clear. You cannot escape gravity, only postpone it. Yet the bubble revealed something deeper about human nature. We don't learn from history, we relive it with different props. The mechanisms were identical to every mania before: scarcity, narrative, herd behavior, and the conviction that this time, the rules truly have changed. The internet didn't abolish economics. It merely gave us a new stage for an ancient play. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe, there's a new financial mania waiting to be understood, and we explore each one. This video is for educational and informational purposes only and is not financial advice. Always do your own research.